Welcome back and on to our special coverage in the run-up to Diwali and Muhurat trading. Prabhudas Lilladher shares their stock picks and ideas for this festive season. Today, we are looking at a long-term instrument that a lot of people look at, or long-term metrics that a lot of people look at. If you are looking for a long-term investment idea this Diwali and do not know what want to worry about everyday movements on the Lal Street, high dividend yielding stocks are the best bets. Well, joining us to discuss the best value buys in this segment is our Sreesankar, Head of Institutional Equities at Prabhudas Lilladher. Sri, thanks so much for joining us. I want to start by asking you, what metrics and how should one look at dividend yielding stocks? Because it's not a simple calculation that you can do, going up, down or sideways or whichever ways. It's really looking at the history of the company and the records of the company. What is the metrics that you would advise people to use?
Okay, first and foremost, dividend yielding stocks traditionally means by saying that there is a high dividend payout but the prices are low, thereby giving you a higher yield. Why it happens is, in many companies, what we see that it is a one-off. Like an Oracle had a special dividend. I think Sasken had a special dividend last year. Similarly is the case when I look at Stride Circular. They sold a business. They had a special dividend. These special dividends actually makes this dividend payout very high when compared to the current price, which is X dividend. So in some cases, it may look extremely high. So one needs to look at what is the consistency at which the dividends have been paid out and what is the price where it is giving a yield. If you see stocks at around 4% plus yield, that is what your normal savings bank interest gives you. For anything 4 to 5, the banks give different rates of interest. Then you start to look at these companies on a consistent basis and come back and say, oh, I get the interest rate what it is. If I get a capital appreciation, that's a bonus for me.
Fair enough. What are the top dividend yielding stocks that you would share with our viewers as good long-term investment bets this festive season?
See, traditionally what we find is, stocks with a consistency in terms of a predictability in terms of their earnings, and you don't see any much growth. So at one point of time, we used to see that the utilities with a fixed rate of return and return that they have were known for stocks for the widows of the stock market. And over a period of time, that has changed because these utilities have moved out. Now, you wouldn't look at it. There is something like a Noida toll bridge. It gives you a 3 rupees dividend on a 25 rupees. So effectively, your yield comes out around 12%, which is much higher than a dividend, the interest you may get on. So you look at companies, be it NMDC, Aegis Logistics, or Polaris Consulting, KSC Limited. Again, it's an animal feed company based in South. R Systems or ILFS Investment Managers, etc. These are all companies with a market cap of over 100 crores plus, and it has been giving quite a high dividend. I'm talking about 7 to 12% ranging at that rate. I'm stripping off those companies which have been giving a higher dividend, but basically I consider as one-off.
Fair enough. Let's look at the Sensex and the Nifty heavyweights. Sri, a couple of companies have been very good at giving dividends. For example, Coal India has a high dividend payout normally, and NTPC also has it, ONGC also has it. But many of these stocks are down. So how should one approach the trade-off between dividend paying and maybe quarterly earning returns in terms of equity markets, etc.? What is the time frame that one should be looking at?
I think one shouldn't look at a quarterly performance of these quarterly returns these companies give it when you're planning to look at a dividend yield companies. So take for example Coal India. You mentioned about Coal India. Coal India still gives what? Based on 2015 March, it is 6.23% yield at yesterday's price. So by any standards, it's a high dividend pay yield company. Now, if things start to improve, your cash generation increases quite dramatically, and you don't need to invest in a large amount of capex, I will only expect that the cash outflow or the dividend outflow should increase. And as and when the industry benefits changes, you get a capital appreciation. That's a bonus. That's what I'm saying. To me, a 6% consistent dividend yield is excellent. So it'll continue to be a good story. Then you mentioned about the NTPCs of this world and etc. This goes back to the point that I first mentioned. some of the utilities, and even for that matter, if you actually start looking at Noida Toll Bridge is probably the first toll road that we have got listed. So you have companies over a period of time where their debt is taken care in terms of it, and you are able to see the kind of a return payment which will keep on coming over a period of time. So from my point of view, a lot of these utility companies or companies in that segment where you have a predictability of your the capex is over, then your revenues are kicking in, that revenues kick in, and you don't have a large capex, you will continue to fall into that predictability of earnings, and that's where you probably see stock prices will not move quite dramatically. It will be a steady performer, but dividend yields tend to be on the higher side. You also see some of the software companies which is probably the dividend yield is high, but on the operational side they have not been doing very well. And if you are looking at a dividend yield, and you should not look at the way you look at in terms of a lot of capital appreciation, the way you happen to see in the growth stories. Wherever growth stories are there, they tend to get priced in very high. Consequently, the dividend yield of these companies will be on the lower side.
So there is a kind of inverse relationship between that. But I am going to ask you, is it fair to assume that given that the government is the biggest shareholder in many PSUs, that PSU stocks actually create dividend yields? Because in the list that we spoke about, be it NTPC, ONGC, or of course the first stock that we spoke about, it's always stocks which are held by the government, because it is a big source of revenue, and we know what the fiscal deficit situation is like here.
Yes, to a great extent you are right about it also, because in that list, if I go down, you will find almost all the PSU banks there. But we all know that PSU banks are struggling for equity. But I really don't understand the logic of paying out a huge amount of dividend, then saying that you don't have money for the capital adequacy levels or Basel III norms, so the government has to further fund it in terms of an equity. So it's a bit of a paradox out there. So if you really look at it, I've removed the PSU banks from the entire list, because I don't think that from a consistency basis I can agree to it. So it may look from a high dividend yield point of view, but does it justify? Answer is no.
Sri, dividend yield stocks are not things that this new generation of investors really look at. They want big returns and steady returns from the market. This is a very traditionalist point of view as far as returns are concerned. So my question to you is that if you were to work out a portfolio, how much of it should be dividend yielding stocks? What time frame should you be looking at if you're investing it now? And what are the checks and balances that you need to put in place?
Okay. Let me come back to the first and foremost the point that you mentioned about dividend yield itself. I think dividend yield stocks will get into prominence when the market is in a bear market or it doesn't go anywhere. That's when the market has corrected and you probably find stocks very attractive. That's when investors tend to start looking at, okay, let me start looking at what's the kind of dividend yield these companies are giving and what's the growth prospects. That's when an entry into these stocks comes in. That's the first point. Second, I don't think generally when the market is in a bull market, people tend to look at dividend at all. People tend to look at growth at that point of time. The investment psyche actually starts to change big time. Unless you are a hardcore disciplined investor who says that I will only buy at these yields, these valuations, and I don't think that I'm going to pay a huge amount for growth. That's a trade-off that you start to make. Third, in terms of a portfolio construction that you mentioned, it's again the investor's risk appetite. There are people, invariably, I would think that the people who are retired, who are looking for a regular income, dividend yield is effectively what they are looking at is, oh, am I going to get a yield higher than what I get it in other asset classes, be it in terms of my certain bank interest rates and so on and so forth. At the same time, I got a relatively lesser risk if I look at the companies in terms of a stock price underperformance. And on the contrary, if they do very well in a good market, I'll get a huge capital appreciation which acts as a bonus, which means that I get a dividend. On top of it, I get a capital appreciation which may be many a times of what the dividend I receive. That's where the trade-off which really happens, when it really happens.
Okay, let me pick out your top picks in the dividend yielding segment. You have Oracle Financial Services, Noida Toll Bridge, which you spoke about, Saskin, NMDC, Aegis. Can you take us through your top picks?
Yeah, I mean, a lot of these stocks, and
I'm sorry,